Hi everybody, welcome to Digital Asset Markets. Today is Friday, July 12th, 2024. So I'm going to start this channel up. I'm going to spin up a new channel here. We'll see how long it lasts. I'm testing this out. I used to do videos around cryptocurrency, specifically XRP. I have since moved on from kind of the XRP community and XRP as an investment personally. It's obviously an example of a digital asset, but this channel will be focusing on the broader market, just my thoughts. It's kind of a way for me to process my own thoughts and on the markets. So it will be heavily ETH based at this point. I think Ethereum and the Ethereum ecosystem has grown to the point where it is, it represents, it's kind of, I guess it's where my interests have taken me. I think all the interesting things happen on Ethereum. I think the new experiments happen on Ethereum. I think the most interesting pieces of cryptocurrency or digital assets now for me happen in the Ethereum ecosystem, including the Ethereum base layer and L2s. So that will be mostly what I'm looking at. But yeah, just my thoughts on the digital asset market. We'll see how long this lasts, if I'll stick with it this time. So just today for this first video, I want to put out just kind of two thoughts broadly. The first one comes from Anthony Sassano, who runs the Daily Gwei, which is a great 3 times weekly YouTube channel on Ethereum. He says, imagine being bearish on ETH just days before the ETFs go live for trading. So what we saw with the ETF news kind of shot Ethereum up from like 3,000 to 3,600, 3,700, and then it completely retraced that. I guess it just still feels like a very immature market to me. I think emerging markets are not what's the word I'm looking for? They are I can't think of the word off the top of my head, but emerging markets are, they're immature. There's not a lot of money in the markets. Different, smaller players can move things in a way that they can't in traditional markets, and cryptocurrency is still obviously an emerging market, and it's not always, I guess, rational to me. So you have ETFs approved out of nowhere. Nobody was expecting the ETFs to be approved for Ethereum. They got approved. They have not started trading yet, but they're about to start trading. But to say that ETH shot up on that news and then wicked all the way back down to before we knew the ETFs were approved. I mean, the ETFs it's going to be Bitcoin and Ethereum most likely as the only places where real traditional money can come into crypto, probably for a very long time. And I don't, I think I don't understand the market not. The market allowing ETH to go back even under 3K is kind of surprising to me, but I guess nothing surprises me in this market anymore. So I think that it is kind of crazy that from here on out, traditional money can come into Ethereum through ETF products, and it's about to go live. And it doesn't mean in the first 2 weeks or 3 weeks, Ethereum is going to shoot up in price, but over the long haul, you have Bitcoin and ETH now as the two projects that are going to be able to get those flows. So I think it's crazy to be bearish Ethereum right now, and I am not. So that's kind of my first thought, coming from, of course, Anthony Sassano is an Ethereum bull, as always, but I agree with him there. So the guys, the other kind of Ethereum-based people I listen to, mostly Ethereum-based, are the Bankless, the 2 guys from Bankless. They talked in their weekly roll-up today about the wick down and kind of the same idea that the ETH retraced its entire gains from the ETF news. And I don't know, it's supply and demand. That's if real money, if real institutional money is coming into crypto, it's for Bitcoin and ETH for the foreseeable future. and I think ETH will benefit from that eventually. So that's the first piece of news today. The second, just a second general thought. I'm going to make this a real short first episode. I think the DeFi 1.0 is so undervalued right now. I think if there's one sector in the market that seems to be just heavily undervalued, I would say it's the I'm pulling something up here on TradingView. I'm pulling up the DeFi Pulse Index. This is DeFi Pulse versus wrapped Ethereum. So basically DeFi Pulse versus ETH. Let me see if I can. I don't want to mess up my window now. God darn it. Let me see if I can get to the 5-year. So this is the 5-year chart on the DeFi Pulse Index. So DeFi Pulse has, I don't know off the top of my head exactly, but it's a lot of the original DeFi tokens. So Uniswap, Maker, Balancer, probably Curve, probably Synthetics. So a lot of the DeFi 1.0, and it has been absolutely hammered. You look back in 2021 to today, it's an absolute hammering of DeFi 1.0, and AV would be another one. And I think it's probably going to be swinging back at some point. I think that the DeFi protocols that have been hardened over these last years and show real revenue, that they're making real money with their protocols. So again, things I would put in that camp would be Maker, probably Synthetics. Uniswap's a tough one because the tokenomics, it's hard to know what flows to the token and what doesn't flow to the token holder is a big deal. I'm not invested in Uniswap anymore. I'm actually I follow a project, and I'm invested in a project called CowSwap that has the tokenomics that are set more to influence the token. All right, so we'll see if my computer can handle this. I just got a little message here. So basically my second main thought for this day is that I think DeFi 1.0 is undervalued. I think you're going to see those projects eventually, whether it's based on new prospects, like people looking at the market and saying which projects are legitimate, which projects have revenue, and then investing in those, or just the natural dynamics of if the tokenomics are set correctly. And tokenomics can change via a DAO vote at any time. But if the tokenomics are set correctly and you have like a buyback and burn or something that influences the token price, then those natural dynamics will kick in as those protocols continue to earn revenue. So I think a lot about the term the Lindy effect. So I've just got this up on Wikipedia. It says the Lindy effect proposes the longer a period something has survived to exist or be used in the present, the longer its remaining life expectancy. So basically, if something's been around, it's been battle tested, it has been hardened, it has been through the cycles of up and down of crypto and potential hacks and all that. The longer something is around, the longer it's been hardened, the more Lindy effect it has. I think that the better chance it has to be around in the future, and from an investment perspective, I think that it obviously speaks well to the prospects as an investment. So that's my second main thought today, is just that the DeFi 1.0 would be a sector that I'm looking at, and I have actually recently bought some. I recently bought some AV from the DeFi 1.0 sector. So that's it for today. I'm going to post this to YouTube, and we'll get this channel started off. I haven't figured out how I'm going to end these yet, but if you can like, subscribe, or leave a comment below if you enjoyed the episode, and we'll see you in the next one.